My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. It's time to praise the winners, the ones that don't need to wait until April 2nd to find out whether their business will be slammed by tariffs when President Trump announces whose earnings will be cut and whose stay the same in a host of industries. Because tariffs are like taxes, and they can cut deep into profits. Today, it all came together, even as the averages got hit. Dow slipping 133 points, S&P losing 1.12%, but the Nasdaq tumbling 2.04%. Wall Street basically decided to rally around the domestics, especially on the service side, and really put the wood to companies with big international businesses. You know what? It all makes sense. Because after the close, President Trump announced a 25% tariff on all cars made outside the U.S., and that is a lot tougher than many thought we'd see, although it's something that I suggested could happen this morning. All the better to own service company stocks. So, fair warning, when I said that this could happen, well, I couldn't find a soul believe me. Yet now there will be huge tariffs on 7.38 million cars coming here. And I think it's going to upset the world. When? How about tonight? But that doesn't mean there can't be winners here when the smoke clears. All you got to do is look at the S&P leaderboard, the stocks that shone brightly today. At the top of the heap is an old Cramer favorite, Cintas. It's the uniform rental play. It aids more than 1 million companies, mostly small and medium-sized businesses, with much more than their clothes. Used to be just uniforms. Now they got natural accessories, mats, mops, first aid equipment, all sorts of restroom supplies. Cintas crushed the numbers today with much better than expected revenue growth, the highest gross margins the company's ever had. CEO Todd Schneider reached out to me to tell me, quote, there is some uncertainty in the marketplace, which we are carefully monitoring, but our value proposition continues to resonate, end quote. See, service business, small cap, not worried about tariffs. Now, I was bummed to hear that they're no longer pursuing a merger with Universe, but the target didn't want to play ball. Too bad. Could have been an unassailable giant that we'd all be talking about. But after looking at this quarter's book of business, I know that Cintas can live without them and is not impacted by tariffs. And now there's Paychex, which we have on tonight. Paychex works with small and medium-sized business. U.S. businesses manage payrolls. And they offer all sorts of services being precisely the kind of thing that won't be hit by tariffs. Remember, you may think that's a low bar, but think again. So many of our major companies have expanded overseas that the sea of the S&P 500 is pretty much blanketed with mines. And we have very pure public service companies. There's also Dollar Tree. That's the all-American dollar store that reported very good numbers today, but mercifully dumped Family Dollar. Now, that was an ailing business. It never should have been bought in the first place. More on that later. Now, I know a very significant portion of Dollar Tree's merchandise comes from China, but on their conference call, they said they'd be able to mitigate a lot of the costs. Now, that is great news. No wonder the stock rallied more than 3%. Finally, look at a little outfit called Molina Healthcare. Again, I'm looking at the leaderboard, the domestic health insurer that works with state governments to give people health care while trying to keep costs down. These guys have no exposure to tariffs whatsoever. One reason why the stock rallied more than 4% today. That's an ideal service business when you're talking about 25% tariffs on foreign cars. Now let's consider the other side of the trade, the biggest losers, all of which were somehow connected to the data center, except Moderna, which plunged 7% because of a Financial Times story that says they might target RFK Jr., be targeted by RFK Jr. at Health and Human Services, and it's certainly possible. Now, what happened in the service side here that was actually difficult was Supermicro. They provide hardware, but they also provide services. They, along with Arista Networks and Broadcom, they were all part of the data center story that people seem to have cooled on. And then what is really the one at the blast center, right, where you most felt it today? Nvidia. Hence, it's nearly 6% decline. We spent a lot of time in Nvidia last week. Right now, people don't like the stock of Nvidia. Now, we can go over all of these, and I can tell you that many people believe the data center story is done after rumored canceling of some data center builds by Microsoft. But given how intertwined Microsoft is with an alpha called OpenAI that we talked to last week, that's the alpha behind ChatGPT, I think it's possible Microsoft's cancellation may simply mean that they're making OpenAI pay for its own computing power. I bet the data center build-out continues at pace, but very few people believe right now, in my view. We're at a curious moment here where any reassurances that the industrial revolution of AI is still on just won't cut it. Every single stock in the sector is being mauled by the bears. Nvidia is being torn to pieces. So let's go to the epicenter of the blast zone, because that's what I like to do. I want you to put your containment suit on first, though. Make sure you have a Geiger counter with you, because Nvidia is being subject to nothing less than a nuclear bear attack, and the radiation burns are scaring shareholders as they question what the heck they're in this one for. Let's start with the White House. There have been a feeling among executives that the strictures put on by President Biden against Nvidia when he did it right on the way out, ones that limited the countries that Nvidia could sell its best chips to, they might be lifted by President Trump. Now, all day I'm hearing that that's wrong, that Trump actually may even go harder against Nvidia, and that alone could be a reason to sell the stock. But there's more. This morning, the Financial Times penned a story saying that Nvidia's chips somehow ran afoul of Chinese pollution controls. Given that China puts up 2 coal plants a week, I was astonished to hear that they could care about the pollution at all from Nvidia. It sounded like the typical journalist hit job against Nvidia that keeps popping up. Nevertheless, along with the rumored White House slap down, well, you could expect the stock to get hit. I know some of you don't care about the technicals, but you know what? There are enough people who do that. I'm going to bring it up. Nvidia's death cross formation happened about a week ago. That's where the 50-day moving average plunges below the 200-day moving average, and it's widely seen as a terrifying development. Sell, sell, sell. Why does this matter? Because this stock is the subject of a tremendous amount of technical pressure. There are multiple inverse Nvidia ETFs. That's bets against the stock. There are also huge bets being placed all day against Nvidia in what's known as the zero-day options market. That's where traders can make a one-day bet against Nvidia, and boy, are they ever doing that. How does it work? You buy a put option on the stock. The customer on the other side isn't interested in making that making a long bet, which is what they have to do. So what do? They have to go in and short the stock. The people who do these trades aren't all that savvy about Nvidia, but they're savvy about the death cross, which makes it a bit of a self-fulfilling bear raid. Sell, sell, sell.
The house of pain.
So what do you do if you own Nvidia? Well, look, if I were back in my old hedge fund, I'd ask myself, why the heck did I buy this thing in the first place? The answer is that I believe in the new AI-powered industrial revolution, where everything tech has to be remade with Nvidia's GPUs, allowing autonomous vehicles and robots to eventually rule the world. I haven't changed my stance. However, I don't believe in self-flagellation. I see the stock coming down from here. I've been saying that. It's become a whipping boy. I've been saying that. It will only get worse with tonight's tariffs. Believe me. It's okay to believe in the stock, but understand that right now it's not right. Down here at less than 25 times this year's earnings estimates, though, I think Nvidia is cheap, but I don't think it's done going down because the bears can plan stories about it, and as long as it goes down after the bears plan stories, that means the stock is in the wrong hands. So how do I describe it? I think the stock trades like a wavy, inflatable tube man, also known as an air dancer. Not exactly the Statue of Liberty. My advice, if you think Nvidia is cheap and the data center, the chief home of Nvidia's chips is spent, well, then what? There's nothing wrong with owning a tube man, except when you see a move south like this, you have to give it some room. You have to let it come down. Okay, those tube men, you know that? It's like, used car. That's what Nvidia feels like right now. All right, now, one day we're going to get some certainty on Nvidia. And if we can get that certainty, we also know what's happening with a whole host of other stocks. They'll all stop going down. A Marvell Tech, a Broadcom, GE Vernova, Vistra. But the bottom line, Nvidia is the linchpin of this group, and the pin is failing. I don't know whether the stock plunges from here, but if you like it enough to keep owning it, I say prepare for the tube man turbulence. Jeff in South Carolina. Jeff.
Booyah, JC.
Man, what's shaking with you, Mr. Non-tariff man, or else you wouldn't be so up? What's going on?
Watching that as well. The JP here from Okatee, South Carolina. Long time, third time.
Okay.
So days like these, as you usually open up, we're just trying to save you some money today.
Right, that's it. I mean, and tomorrow too. And already I'm feeling it. Believe me. Go ahead.
We have a long-time club, best of breed name. Just seems to be stuck in the mud. So should I hold on consistently, continually, buy more? Or dare say, sell and move on. Hey, I love your interactions with Regina and the crew, especially when we try to do those twofers. How about the very first time on a threefer? Regeneron, Elf, Chipotle.
Chipotle. All right, so Chipotle, I don't want to be a weasel here, but it sells at 38 times earnings, and that kind of stock is going to take a little bit of heat just because the market's going to be down off the tariff news. But it is the kind of stock you would buy after the tariff news is digested, but it is going to feel like you're digesting something that's real bad tasting. Let's go to Tina in Florida. Tina.
Hey, Jim. Years ago, when you've told us how you came to the decision to buy a position in Apple, you've told us about your daughters and how they had iPods in every color, and everyone had iPods. Similarly, now I'm thinking about starting a position in a company, and I travel a lot, and everywhere I go, in every airport, I see people wearing these shoes, and I'm wondering if On Holdings would be a good investment.
Okay, we have liked On Holdings for some time. We actually started liking it in the 30s. We bought on the company multiple times. It is a high multiple stock, same multiple around this Chipotle. I want you to buy the stock, yes, but I want you to let it come in first because the market's going to be looking a little peaked off of these, frankly, off of the very high tariffs that many people weren't expecting. But if you watch our show, you know they were coming. Right. I don't know whether Nvidia keeps going down from here, but if you like it enough to keep owning it, I say prepare for additional tubular turbulence. Remember, all I'm doing is being that guy. You know, the guy with the tube man? That's what Nvidia feels like right now. I'm just trying to put it as it really is. All right. On Mad Money tonight, CoreWeave's IPO is on deck for later this week, but is the stock ready to tackle the tape? I'm looking at the cloud's backstory, balance sheet, and more. Then, fresh off a top and bottom line beat from Paychecks this morning, I got to check in with the CEO to what he hears about the state of small business not subject to tariffs and mostly service. And later, I'm digging into the path forward for discount retailers after Dollar Tree announced it will divest its Family Dollar business. Tough day here, harder tomorrow. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.